Hey all, welcome to ShareTreck. This is Raj here. And this morning is a very interesting day. Here's the comprehensive pre-market update that I'd like to give you all, the way I look at it. So let's start off with the global geopolitical tensions, which is the bull in the room or the elephant in the room. The Iran-Israel conflict continues to escalate. The whole world is on edge as the conflict between Iran and Israel intensifies, now entering its sixth day of direct missile exchange. Explosions have rocked both Tehran and Tel Aviv, while Israel is advising evacuations near Tehran to facilitate airstrikes on Iranian military sites. The situation is highly volatile, with diplomatic efforts faltering and world leaders issuing urgent calls for restraint. Interestingly, President Trump has adopted a confrontational tone, demanding Iran's unconditional surrender and hinting at possible U.S. military intervention. He's been blowing hot and cold. The White House is reportedly weighing direct action, which would mark a significant escalation in U.S. involvement. Russia and China have both warned of catastrophic consequences if the conflict widens, with the Kremlin stating the world is millimeters away from a nuclear disaster. And markets are particularly sensitive to any signs of escalation, as the Middle East conflict threatens to disrupt global energy supplies and further unsettle investor sentiment. And in the context, if you look at the futures, which we are seeing out here on the screen, you will see that we had been negative a while ago, but now the market has started getting into the positives as we inch closer towards the opening. So there is a lot of irrational exuberance in the market, in my opinion. On the domestic front, if you look at the interplay between President Trump's economic agenda and the Federal Reserve's cautious stance, which should potentially be a focal point for investors. Trump has touted a golden age for U.S. economy, emphasizing robust growth and low unemployment. However, the Fed under Jerome Powell remained vigilant about inflation and is signaling a continued pause on interest rate changes for now, until they get to see what is happening with the economy as a whole. And the central bank's recent meeting indicated rates will likely remain steady, but markets are closely watching for any shift in tone or forward guidance, especially as inflation data remains mixed and global uncertainties mount. And the Fed's policy trajectory will be a key driver for equity and bond markets. And Trump is continuing to hammer Chairman Powell with all kind of nicknames, egging him to do a whole lot of rate cuts. So we'll have to see how things work out. At one point, Trump was saying that he could probably appoint himself as the Federal Reserve chairman, and he would do a better job than most people. And in the light of all of these things, I think the positive we are seeing in S&P 500 and NASDAQ futures is really encouraging for the market this morning, because there is money to be made. Animal spirits are still alive. Recent retail sales data show a resilient consumer sector, with May 2025 figures coming in stronger than expected. This bolsters the narrative of ongoing economic strength, even as headwinds from higher interest rates and geopolitical risks persist. Strong consumer activity is helping to offset some of the uncertainties elsewhere, but any deterioration in sentiment could quickly change the outlook. That's the most important thing that we have to keep in mind. And I think in the background, a major structural story continues to unfold. States are offering massive tax breaks to attract data centers from tech giants like Amazon, Meta, and Google. And these facilities are critical for, these facilities happen to be quite critical for powering the ongoing AI boom, with data center investments projected to reach $1 trillion by 2027. However, these tax incentives come with significant trade-offs. States are forfeiting hundreds of millions in tax revenue, and critics argue that the economic benefits may not justify the costs, as data centers create relatively few permanent jobs and place heavy demands on local energy grids. the debate over long-term impact of these incentives is heating up, especially as AI revolution accelerates. Now, in this context, I would just like to take you into our AI watch list. And let me just make this into a single. Now, if you look at this, and the beneficiaries are basically NVIDIA, Meta, Google, Amazon, Microsoft, and of course, you've got AMD and SMCI. So these are all the major beneficiaries, also Palantir, because there's a huge uptake for AI, and there's a whole lot of enthusiasm to the extent that there's a lot of tax breaks being given. And also in the AI field, you'll find that there's poaching of expert staff or expertise from various companies. And that's going to lead to a boom in the salaries in the AI sector. So a whole lot of exuberance in this market is basically coming from AI sector. And that is what is distorting our view of what is happening with the real economy. And since stock markets are forward-looking, they're looking at AI, the boom right now, and also the potential of all the increased productivity for various industries down the line. And the market is going ballistic on these counts. But we have to see how things turn out with the inflation situation, the tariffs, and the geopolitical conflict. So we are losing, in my opinion, we are losing track of the ground reality while chasing a pie in the sky. At least that's how I feel. And I'd like you guys to let me know what you think in the comment section. And this morning in the US stock market, several key factors are influencing market movements. So US stock futures are recovering after pointing lower earlier as investors are weighing the geopolitical risk. Trump has said he's going to take 2 weeks to decide whether or not to get involved in the Iran-Israel war. And I think that's also having an impact on the oil market. Brent crude oil prices have dropped over 2% following Trump's statement, which is impacting energy sector sentiment and broader market dynamics. And specific stocks are moving notably. Accenture shares are down after disappointing bookings. GMS shares are surging due to acquisition interest from Home Depot and QXO. And Circle Internet Group shares continue to climb following stablecoin legislation passage by the Senate. And the broader market sentiment is cautious with mixed signals. Treasury yields are rising, gold futures are lower, and Bitcoin is gaining. Overall, S&P 500 is slightly down, but recently picked up in early trading, reflecting these combined geopolitical, commodity, and corporate earning influences. Depends on what is on top of the mind at any given situation until the market opens. In summary, geopolitical tensions related to Iran, energy price movements, and select corporate news are the main drivers moving the US stock market this morning, pre-market. And the key takeaway for investors is that geopolitical risk is front and center, with Iran-Israel conflict threatening to spill over and impact global markets. And US economic policy remains a balancing act between Trump's pro-growth agenda and the Fed's cautious approach to inflation. And the consumer sector is holding up, but vigilance is warranted as conditions can change rapidly. The AI-driven tech sector is reshaping state economies and tax policy, while important implications for both market, it serves as some important implications for both markets and public services. So let's keep all these macro factors in mind as we look at today's action. In the future, so what I would like to show to you is I would like to get into the one-day chart and give you an idea of where we are poised right now. So if you see this candle out here, this is today's candle. The chart has got all candles of 1 day length each. And when you look at this particular candle, you will see that it happens to be just above the 9-day exponential moving average. And that's going to be our primary support for today. And if we break down, our next support is the 21-day exponential. And pre-market, we have tested both of them, and both of them survived the test. And our resistance today is going to be around 6,082. So that's the range in which we are likely to move. I'd like to once again point to you that we have a bearish divergence out here. If you look at this line out here and this you can see a bearish divergence. Ditto for NASDAQ as well. We have a bearish divergence. And pre-market, our candle has been held back by this diagonal line of resistance, which happens to be at 21,988.25. And I'm pretty sure that by the time the market opens, we may cross above that. But I'm not very sure that we are going to stay above that until the end of the day. We'll have to watch how things unfold, because everything is at a high level of risk. Overall, we spoke about geopolitical issues. We spoke about the tariff issues, and all of those things are still in play, along with the wars. And dollar index is looking pretty decent at this point of time. It's poised to break through this diagonal line of resistance, which has been with us for a long time. And if we break through above this, then our 21-day exponential, which is at 98.97, is going to be the next resistance. The sentiment is reasonably bullish. MACD is also bullish. Just the momentum is not there. So we'll have to see what happens in that angle. Now let's go on and have a look at the indicators where we left them yesterday. I mean, on the day before, when the market closed. We were just below the 9-day exponential, but as we have saw in the futures, that we are going to be above this diagonal line of resistance, and this will form the support for today at around 6,014.22. That's going to be the support, and resistance is going to be 6,077.28 for S&P 500. And if we are looking at the divergence out here, you can see the bearish divergence still in place. And likewise with the NASDAQ, bearish divergence is in place. And the 9-day exponential will be the support for today, failing which the 21-day will become the support. And the 21-day exponential happens to be at 21,483.04. The VIX is down 11.15%, and I think I don't know why the VIX is not elevated, given the overall situation that we are in. But basically, I think the market is looking at AI and thinking that, yeah, there is a lot of opportunities out there, regardless of whatever happens in the overall economy. The governments of various jurisdictions are giving a lot of tax incentives and facilitating AI data centers, and therefore it's going to be all good. And the indices are heavily weighed towards AI stocks, and therefore I think we are looking at the VIX still being benign despite so much of risk out there. Gold is also down 0.65% in pre-market trades, which is falling below the diagonal line of support out here. So I'm really glad that I didn't jump into gold out here. I waited for it to test and confirm the neckline, and that confirmation did not happen because the next day we canceled all the upward move. So this was a wash between this green candle and the red candle. And now we are on our way down. So the next stop could be a support which comes to us along this diagonal line of support, which is a dynamic line of support. And it could range anywhere from 3,257 all the way up to 3,268, depending on how many days we take to reach this line of support. The overall sentiment is bearish. MACD is also bearish, and momentum is just at average. So that's what we have there. And put call ratio looks bearish to me at this point of time, mildly bearish. And let's go and have a look at our AI stocks. So when we look at the AI stocks, I think what I would like to point out here is NVDA had a whole lot of gains, and I still have a target for NVDA, which is going to be somewhere around the region of $162. But at this point of time, we are being constrained by this diagonal line of resistance, and we get support from the 9-day exponential sitting at 143.22. So for today, the range for NVIDIA is going to be from 143.22 all the way up to somewhere around 146.99. We do have a bearish divergence. The bearish divergence is likely to start acting. And another thing I pointed out yesterday is that we are not having a bull flag out here, because a bull flag always comes down and then moves up. This is some kind of a bull channel happening out here. It is curving out, and typically I have seen that when this kind of a curve happens, then the price falls afterwards. So I'm thinking that there is likely to be a drop in the prices going forward, in which case the ultimate support is going to be 140.21. Meta is up 0.26%. It's looking good at this point of time, even though it has got a bearish divergence. And you have Google, which is up 0.26, Google, which is up 0.10%. And Google has been very nicely priced, and its movement upward has also been very measured as compared to the other Max 7 stocks. And at this point of time, Google is also making a gradual progress upwards, with the 21-day exponential at 173.05 being the support. And I think we'll have a support again today at somewhere around 174.32 when the market opens. Presently, we are at 174.15, just on top of this line out here. And our resistance for today is going to be the 9-day exponential at 175.72. Then we have Amazon. Amazon is up 0.45%. In pre-market trades, sentiment is bullish, but the MACD and the momentum both are weakening. And even though we have a reverse head and shoulder target, which could ideally take us all the way up to somewhere around 258, at this point of time, all of those things look a bit doubtful, with a resistance for us sitting at around 215.68 for today. Next, we have Apple. Apple is up 0.04%, struggling a lot. It's still dominated by this diagonal line of resistance, which has been coming with us for a long time. And today, again, it's going to perform its role as a resistance, and it's going to be at around 198.32. So that's our resistance, and our support is likely to be at around 191.8 or something in that range. Microsoft is down 0.09%. Again, just like as I mentioned, in case of NVIDIA, Microsoft is curling around and then it will fall down in order to fill up this gap up. That's my thought process, and I'd like to hear from you guys. What do you think about it? Because the overall market is under strain, every valuation is stretched. There is not much room for this to go up. As you can see, the bullish sentiment is also waning. MACD is bearish, and we have got a bearish divergence out here, which continues to exist, and it's going to cause a problem for Microsoft sooner rather than later. Now, Tesla is up 1.81%. We'll have to see the result of the robotaxi launch. We'll also have to look at the Optimus robots. We have news that NVIDIA has deployed its robots into some company. I don't remember the name of the company, but NVIDIA has already done that. Let me just quickly have a look at NVIDIA and see if there's a news article out here. Okay, market. NVIDIA in talks to deploy humanoid robots at Foxconn Houston factory. So if this happens, then the question is, Tesla needs to run real fast to prove its robotics chops, because a lot of premium for Tesla is riding on robotaxi and AI. Of course, XAI does not belong to Tesla. In fact, Tesla GPUs were diverted to XAI. So we still need Tesla to prove its credentials as AI and robotics major. Now let's look at Oracle, which is up 0.07%. It's creating a bullish pennant pattern out here with an intention of breaking out on the upside. MACD and sentiment and everything is looking pretty good at this point of time, except that it was overbought, but it could consolidate a few days and then potentially break upwards. This is a large bull flag going all the way from here, which is 176.08 to all the way up to 215. So this bull flag can come all the way down to this support and then bounce up and still be valid. So we have a few more days, maybe a week or so, before we see the next move up from Oracle. It could move up before that, but I don't see any concern in Oracle right now in my mind. AMD is up 0.86% in pre-market trades, and we have a resistance at around 130.89 and a support at around 125.22. And SMCI is up 0.97% in pre-market trades with a resistance somewhere around 46.05 and a support, very strong support at 42.95. And we have Broadcom, which is down 0.03% and trying to mend before the market open. And I'm sure that when the market opens, it's going to be about 250.06, because right now it's at 251.30. So 250.06 is going to be the support for today. And also, if you look at this, it's a bullish pennant that we have formed out here. So it has to break out on the upside and move upwards. And I think we'll look at more positives in store for Broadcom. Palantir continues to make its move upwards with a gain of 0.36%, and it's looking pretty sharp. 9-day exponential sitting at 136.06 is giving it pretty good support, and that makes it look pretty good for a day trade at least. SMH is up 0.38%, and it still has this diagonal line of resistance out here, which is going to prevent it from going up beyond 267.14 today. And the 9-day exponential at 259.15 is a very good support for today. The sentiment is still bullish, but we still have the bearish divergence out there. So it advises a word of caution that something could give up. And also we have this gap up which needs to be filled up. And this is linked back into NVIDIA's gap up. And let us look at Tempus AI, which is up 0.69% in pre-market trades. So our support is the 9-day exponential at 68.63. Right now we are at 69.58. And resistance, I think, probably today is going to be 72.31. But if you look at the chart, we would say that resistance for today could be all the way up to 77.29. That said, I think everything is looking good despite all the dark clouds that we see around here. And overall, I think I'm happy with that. I just want to have a quick look at Eli Lilly. It's finally up 0.42%, but it's coming closer to this median. So I would wait and watch for it to touch the median and bounce up. We can already see that it has made a touch out here. It has touched the center point, or the median as I call it, which also coincided with the 21-day exponential moving average. I already had 300 Lilly, out of which I sold 100 and took profits. So I still have 200 which are profitable. So I might watch Lilly later on today to see what the overall market looks like and how Lilly is responding, and decide whether I want to sell the remainder of my stocks or whether I want to buy a little more, so that I can probably look for a jump up and ride back up again like it happened here. So it came down, went just below the median, and then came back up again. So I want to see if that kind of a thing could probably happen out here. If not, I think I want to sell it off. So that's my game plan for today. As far as genomics are concerned, I'm not buying any genomic stocks at this point of time. As far as my position is concerned, given my risk appetite, my opportunity to buy genomic stocks has gone. Right now, it is facing upward pressure. It's moving upwards, and risk reward is skewed more in favor of risks for me. So I'm going to wait and watch and see if I can get another opportunity later on. But right now, I'm not getting into it. Prime was looking very good yesterday, and it's looking good today as well, with a gain of around 3.3% in pre-market action. And that takes it clearly above this horizontal line of resistance. So it is, if it closes above this line of resistance, that will be confirming that this can become a support going forward. And then our resistance will be this diagonal line of resistance. For today, it's 1.92, and it's a dynamic line. So with every passing day, it goes up and gives more room for Prime to grow. Market sentiment is bullish, MACD is bullish, momentum is also pretty good. A lot of room in the RSI to go up. So Prime is looking good today. And remember, all of these genomic stocks depend on the overall market sentiment. For no fault of theirs, if the market sentiment goes down, these guys will drop like a ton of bricks. So always be careful with the genomic stocks. Intelia is up 0.73 in pre-market, and our support continues to be 8.98. Very strong support there. Resistance continues to be 11.30. Caribou Biosciences is up 5.47 in this morning's trade, and our resistance earlier, which was at 1.25, has become a support for us. So I'm going to convert this into a support, and that will be the support for today. As far as resistance is concerned, I think I'll give you a resistance for today which is going to be somewhere around here. So this is going to be the resistance. I'm going to mark this red, and resistance is at $1.50. Sorry, $1.50. That's the resistance for Caribou Biosciences. And if you look at Beam Therapeutics, it's down 0.41% in pre-market trades. Support continues to be at 15.88. Altimmune is up 1.18%. 9-day exponential is the support for us right now. Even though I have target of 8.67 for quite a while, we have not yet reached there. However, I'm feeling encouraged because we have a bull flag developing, and this bull flag has a potential of challenging this resistance at 8.16 and pave the way for reaching 8.71. So I'm optimistic. Overall market sentiment for this stock is bullish. MACD is also bullish. Momentum is also above average. Verve Therapeutics is down 0.45% in pre-market trades after having done a huge gap up. It's kind of consolidating. And you remember the Eli Lilly takeover news. If you're not seen my video on that, please check it out. And you will find that Verve has already reached its potential. So what should happen next is just a bit of consolidation and profit taking. For those who cannot wait for the deal to be closed, they can take profits and move out. I think the stock is overheated. High risk to get into it right now, in my opinion. If you think otherwise, please put that in the comment section so that I can understand your thinking process. And we have Editas, which is up 1.70%, a beautiful move upwards. And I think for the sentiment, you can see that it's absolutely bullish. MACD is also bullish. Momentum is above average, and it's very high. So everything is looking good for Editas at this point of time. Illumina is up 0.34%, and it has managed to break through this huge area of support. So I'm going to change this area of support into green color to show that it's a support, and we are going to build foundation here and move upward. And remember, the move has been very gradual, so it's careful move upwards, systematic move upwards. So the price is quite robust for Illumina, and you can see that sentiment is overall bullish. MACD is also bullish. Momentum is above average and plenty of room on the RSI to go up. CRISPR Therapeutics has achieved great heights. It's gone up to 45.06 in pre-morning trades. And the support and resistance level is same as yesterday, but hats off to all those who had the fortitude to hold on to CRISPR Therapeutics for so long. I think you have well-earned profits, and it's up to you to decide what you want to do. Do you want to do a covered call, or do you want to sell half of it, or do you want to dollar cost average upwards? I don't know. It's your choice, but if you have CRISPR and you're making those choices, please put in the comment section what you're doing so that I can share in your happiness and your plans. Now we have Allogene, which is up 0.78%, and it's still not been able to break through the horizontal line of resistance at 1.35, which is going to again be a blockage for us today, a resistance, because pre-market we're at 1.30. Now Grail is up. Grail was up 15.20% yesterday. That was a huge jump. After that, there's been a bit of profit taking, in my opinion, because it's down 0.08% in pre-market trades. Let us see what happens when the market opens. I think the sentiment is bullish. MACD is also bullish. Momentum is pretty strong. And I think there's plenty of room on the RSI before it gets overheated. So what's there to stop Grail? Maybe a little bit of profit taking, but it should go up further. PSCB is up 0.76%. The other day I had a chat with a few subscribers in the chat section. They were very keen to know my opinion about PSCB. But unfortunately, as a retiree with high risk sensitivity, I wouldn't touch PSCB. I'm not saying it's a bad company. It's just that it's going very close to the dollar mark. And we are seeing value destruction with SQZ Biotech, which got ultimately delisted after it fell below $1. Then we have seen the same story with Ginkgo Bioworks, which is again losing value after a reverse split. And then, of course, we saw the story of Bluebird Bio, which didn't turn out too bad, but our lofty hopes for getting lots of profits on Bluebird Bio, despite 3 therapies approved, turned out to be false. Private equity took the prize and ran away with it. So those kind of things prevent me from getting anywhere close to PACB. ARC-G is up 1.37%, looking very good on the charts. It could go up potentially. Everything looks supportive. Vertex was up 1.45% yesterday. Day before yesterday. And today, pre-market, it's up 0.08%. But that still doesn't take it above 449.22. And right now we are at 448.74. And I'm pretty sure that when we open, I think this will be the support. So 449.23 is likely to be the support for today. And resistance for today is going to be 476.05. Ginkgo Bioworks is up around 2.10%. So support for today is going to be at around 8.38. And the resistance for today is going to be at around 9.42. Even the 9-day exponential at 8.59 could perform a role of support today. That said, I think I would like to bring this video to an end, and the live stream probably should come to an end unless there's any audience interaction, which I don't seem to have any. So I think I'm going to wind up the live stream and go have my breakfast and get ready to start trading. And thanks to those who have tuned in and for giving me companionship. So I'll catch up with you again later on. Bye for now.